Welcome to the deep dive. So if you've been following Sempra, you probably saw the Q3 2025 results and maybe did a double take. The headline numbers looked, well, pretty volatile. A huge drop in profit compared to last year.
Right, a real shocker if you just glance at it.
But we know with these complex utility giants, sometimes the biggest swings aren't about operations, are they?
Exactly, and that's what we're digging into today. We're going to cut through that headline noise.
Okay.
We've got the Q3 earnings presentation, the combined 10Q for Sempra, SDG&E, SoCalGas, and our mission is to show you how these huge strategic decisions are behind the numbers, not some operational slump.
Got it. So focusing on their core value initiatives.
Precisely. Those 5 initiatives really explain both the accounting weirdness and where they're headed long term.
All right, let's kick off with the big strategic picture. Sempra's stated goal, building America's leading utility growth business. That sounds like a shift, focusing things down.
It absolutely is. They're moving away from that sort of, global conglomerate model and doubling down on North American infrastructure, especially those regulated utilities.
And the main mechanism for this seems to be capital recycling.
That's the term they're using. It basically means selling off assets that aren't core anymore or where they don't have full control.
Okay.
Tidying up the balance sheet and then plowing that cash back into utility investments they think will yield better returns.
And the absolute cornerstone of this, the one really making waves in Q3, is the Sempra Infrastructure Partners sale. SI Partners.
That's the big one, yeah. Dominates the report. In September 2025, they inked a deal to sell a 45% stake in SI Partners to KKR.
KKR Partners, okay. And the price tag?
Pretty substantial, $9.99 billion, though that's subject to adjustments when it actually closes.
Which isn't immediate, right?
No. They're targeting Q2 or Q3 of 2026 for the close, but signing that deal in September, that's what immediately changed the accounting picture for Q3 25.
So 45%. That leaves Sempra with 25% and KKR plus their existing partner ADIA holding the rest, 75% combined.
Correct. And that flip, going below 50% ownership, is critical.
Why is losing that majority control so significant?
Because it triggers a definitive loss of control from an accounting perspective. It means Sempra stops consolidating SI Partners' results.
Okay, so deconsolidation, what does that mean practically compared to full consolidation? Does Sempra just book less profit, or is it more fundamental?
It's more fundamental. Instead of SI Partners' revenue, debt, everything hitting Sempra's main financials, they'll now just record their 25% share of SI Partners' net income. It's called the equity method.
So less volatility on Sempra's books, trading direct control for maybe more stability.
That's the idea. It smooths things out, reduces the direct impact of SI Partners' debt and operational swings on Sempra's results. It really shifts the focus back to the steady, regulated utility earnings, even if it means, giving up the driver's seat on the big LNG projects.
And it wasn't just SI Partners they're simplifying, right? There were mentions of Mexico, too.
Correct. Back in June 2025, they also committed to selling EcoGas, which is a regulated gas utility down in Mexico, not core to the new strategy.
Another move to simplify, reduce risk.
Exactly. Also aiming for mid-2026 closure. And all this ties into their big capital plan for 2025, about $13 billion, heavily weighted towards those utility investments, plus their Fit for 2025 cost-cutting plan.
Okay, let's circle back to those shocking Q3 numbers then. Earnings attributable to common shares. Just $77 million.
Yeah.
Compared to $638 million a year before. And diluted EPS plummeting from $1 down to 12 cents one. If you didn't know about the KKR deal, you'd think the wheels were coming off.
And that's why context is everything. That volatility, it's almost entirely due to the accounting for that strategic restructuring.
Not operation.
Not operations. Look at the Sempra infrastructure segment itself. It reported a $580 million loss in Q3 25.
Wow.
Compared to a $230 million gain in Q3 24. That swing basically wiped out the solid performance from the utilities.
So what caused that $580 million loss in the infrastructure segment?
It boils down to one massive item, a $705 million income tax expense.
It's just tax.
Yeah, but it's a non-cash charge. It was triggered because legally, once they signed the deal to sell the controlling stake to KKR, they had to reclassify SI Partners as an asset held for sale.
And that classification triggered a huge tax bill, even though the deal hasn't closed.
Exactly. It's accounting rules. You have to recognize the tax implications related to the difference between the book value and the estimated fair value, less costs to sell, basically. It's a painful upfront hit.
So they took this massive non-cash charge, knowing it would tank the quarterly EPS just to prepare for a deal months away seems aggressive.
It's conservative accounting, perhaps, but it's the required way to handle it. It cleans the slate, it shows they're committed to this simplification, and it avoids dragging out the tax impact later. Q3 2025 was fundamentally a transition quarter defined by this corporate restructure.
Okay, that distinction is absolutely crucial for anyone watching Sempra. While infrastructure was tangled in this accounting, the actual utility businesses were doing okay.
They were doing well, actually. That's the contrast. Sempra California, so SDG&E and SoCalGas and Sempra Texas utilities both saw earnings increase.
What drove those increases?
In Texas, it was mostly rate updates reflecting more money invested in the system. In California, it came from higher revenues authorized by the CPUC from their last big rate case. Solid, predictable utility performance.
So the utilities are the stable base.
Yeah.
But they have their own risks, especially in California. Wildfires are always the big one for SDG&E. Q3 had some news there.
Yes, and it's pretty significant for managing that long-term risk. New legislation, Senate Bill 254, was signed in September. It creates this $18 billion thing called the continuation account.
An $18 billion backstop. How does it work?
It's like a secondary insurance layer. It only applies to wildfires ignited after September 19, 2025.
Yeah.
And critically, only if the existing state wildfire fund runs dry. And even then, it only covers claims above $1 billion or above the utility's required insurance, whichever is higher.
So it's for truly catastrophic events. Does it cost SDG&E anything?
Oh, yeah. It's not free protection. SDG&E's share is about $387 million in contributions, spread out in payments through 2045. Some are fixed annual payments, some depend on whether the account actually gets tapped. It's basically a copay for major disaster insurance.
Got it. Wildfires aside, SDG&E seems perpetually in rate disputes with FERC, the federal regulator, over transmission lines. What's happening there?
Always something. Two main issues highlighted in the Q3 filing. First, the TO5 settlement issue. FERC ruled SDG&E wasn't eligible for a specific grid operator adder fee and ordered them to refund it retroactively all the way back to June 2019. That's a potentially big hit. SDG&E is appealing, naturally.
And the second issue?
That's the TO6 filing. This is SDG&E asking for higher rates. They want to bump up their authorized return on equity, the ROE on transmission assets.
From what to what?
From 10.1% base ROE up to 11.75% plus that grid adder, aiming for 12.25% total.
And FERC's response?
FERC immediately suspended the request and, again, disallowed the adder. So now SDG&E is fighting appeals on two fronts just to maintain or increase their transmission earnings. It's tough.
Definitely sounds contentious in California. How does that compare to Texas? Sempra has Oncor there. Are they facing similar battles?
Well, Oncor is in a rate review process with the Public Utility Commission of Texas, the PUCT. But maybe the tone is different. They're asking for quite a bit.
Like how much?
They filed for a comprehensive rate increase averaging about 13%. That translates to roughly $834 million more in annual revenue.
That's significant. Are they asking for changes to ROE too?
Yes. They want a slightly higher equity component in their capital structure, 45% equity, up from 42.5%. And they want a higher authorized ROE, 10.55%, up from the current 9.7%. They're definitely pushing for better returns on their investments.
Has Texas approved any of this yet?
They got interim rates approved back in September, which helps cash flow now. But those rates could be adjusted up or down later, retroactive to the start of 2026, once the PUCT makes its final decision. So still some uncertainty, but maybe a generally more favorable climate than California right now.
Okay, let's swing back to Sempra Infrastructure. Despite the deconsolidation plan, it's still the big growth engine, right? Especially the LNG side. Any major moves there in Q3?
Huge news. They reached the final investment decision, the FID, for Port Arthur LNG Phase 2.
The second phase.
Yep.
FID means they're officially going ahead.
Yep. Construction is starting. They're targeting commercial operations for trains 3 and 4 in 2030 and 2031. It's a massive undertaking.
How massive? What's the cost?
Estimated total capital cost is around $14 billion. Billions with a B.
$14 billion. Wow. How are they funding that, especially while selling down their stake in the parent company, SI Partners?
Partnership is key. They brought in Blackstone. Blackstone got almost half, 49.9% of the equity in Phase 2. They paid $3.4 billion cash up front. and committed another $3.6 billion. SI Partners holds the other roughly 50% and has committed up to $7.8 billion. It spreads the risk and the massive capital requirement.
Makes sense. Now, these huge projects obviously carry risks. There was a tragic safety incident earlier in the year at Phase 1, wasn't there?
Yes, sadly. Back in April 2025, an incident at the Phase 1 site led to the deaths of 3 contractor employees from Bechtel and injuries to 2 others. There are a couple of lawsuits pending related to that.
Is that impacting construction?
The report states that construction under the main contract with Bechtel is proceeding uninterrupted.
Beyond physical construction risks, what about legal or permitting hurdles for these LNG projects? Always a factor.
Always. For Port Arthur, there was actually good news recently. The Fifth Circuit Court of Appeals upheld their main Clean Air Act permit back in August. That was a big win.
So construction can continue confidently.
For now, yes, but the groups challenging the permit still have a window until November 10th to try and appeal to the U.S. Supreme Court. So there's still that slight uncertainty hanging out there.
And the project in Mexico, the ECA Regas facility.
Still facing some legal challenges related to permits and some land disputes, although one specific land issue right at the facility site was resolved in their favor earlier this year. So progress, but still ongoing legal processes.
Okay, pulling it all together. Divestitures, massive new investments, ongoing regulatory battles. How is Sempra managing its overall finances and liquidity through all this? They need to keep those credit ratings solid.
Right. They made a move in October, just after Q3 ended, to tweak their capital structure. They redeemed $900 million worth of Series C preferred stock.
Paid it back.
Well,
where did the cash come from?
They essentially replaced it with debt, mostly new junior subordinated notes and some short-term debt. Swapping higher cost preferred equity for relatively cheaper, though more structured debt, it optimizes the balance sheet, and they're also selling common stock through that ATM program at the market. How does that work? The report mentions selling shares but getting no initial proceeds. That sounds odd.
Yeah, it's a bit complex but smart. It's an ATM program for up to $3 billion. Since late 2024, they've entered into agreements to sell almost 5 million shares using forward sale agreements.
Forward sales.
Right. It means a financial institution, the forward purchaser, borrows Sempra shares, sells them into the market now at current prices.
Okay.
But Sempra doesn't get the cash immediately. Sempra essentially locks in the sale price and the commitment for funding, but they defer receiving the actual cash until settlement dates way out in the future, some as late as March 2027.
So it secures future funding without flooding the market or diluting earnings right away.
Exactly. It's a way to manage financing needs over time. And despite all this activity, the key takeaway on the balance sheet is that Sempra, SDG&E, and SoCalGas all kept their investment-grade credit ratings as of the end of Q3.
That's crucial.
Okay, so let's try to synthesize this whole deep dive. Q3 2025 for Sempra looks incredibly noisy on the surface because of that massive accounting hit from classifying SI Partners as held for sale.
Right. Short-term pain for a long-term strategic goal. Simplification.
But underneath that, the core regulated utilities in California and Texas are chugging along, providing that stable cash flow.
Bedrock. Yeah.
And that stability is what allows them to pursue this very aggressive growth in North American energy infrastructure, primarily LNG, highlighted by the big FID for Port Arthur Phase 2.
Absolutely. It's a balancing act. The predictable utility cash flows are the anchor. They enable Sempra to make these huge multi-billion-dollar bets on infrastructure growth, which is now very clearly focused on North American LNG and related assets.
Which brings us perfectly to a final thought for you, the listener, to chew on. It relates directly to that Sempra Infrastructure Partner sale and the shifting control. KKR Partners, along with ADIA, will soon hold 75% control of SI Partners. Sempra keeps a sizable 25% minority stake, but they lose control.
Right. Majority control shifts to KKR and its partners.
So the question is, how will that fundamental shift in governance actually play out? KKR is an investment firm, laser-focused on financial returns, likely in a different timeline than a utility like Sempra.
Different incentives, essentially.
Yeah, exactly. How will KKR's majority control versus Sempra's significant minority influence with specific consent rights shape the future strategy, the pace of development, maybe even the risk appetite for these massive LNG projects like Port Arthur? Will their goals align? Or could we see friction down the road? That dynamic between the new majority owners and the founding minority partner seems like it will be critical in defining Sempra's path forward. Something to watch.